You will see the precious metals move as a consequence of the fear buyer coming into the gold market. After the gold is moved, after momentum has been established by the fear buyer, if past is prologue, you will see silver move further and much, much faster. All I can say about when is...
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates. Hey, buddy, grab a cup of coffee because I've got some really juicy market insights to share with you today. You remember the whole deal with gold prices and how they're influenced by a whole bunch of factors, right? Well, things have taken quite a turn recently, and you're about to find out why. First things first, have you been keeping tabs on the gold market lately? If not, you're in for quite the roller coaster ride. So the main highlight at the moment revolves around the Jackson Hole Symposium. Now, if you're wondering why that sounds so familiar, it's because it's one of the most anticipated events when it comes to the world of finance. And this year, all eyes are on one person, Jerome Powell, the chair of the Federal Reserve. The whole financial community is buzzing with speculation and questions. Everyone's on their toes, wondering what Powell's stance will be on interest rates. Will he lean hawkish, suggesting a potential rise in interest rates? Or is he going to favor a more neutral policy, advocating the benefits of holding them steady for a while longer? It's this intense atmosphere of curiosity and speculation that's causing gold prices, that barometer of economic mood, to sway with uncertainty. Market insiders and participants are absolutely craving to know the Federal Reserve's future plans, especially regarding how long they're planning to keep interest rates elevated. Trust me, the upcoming speech is shaping up to be a monumental event, and its ripples might just redefine market dynamics for a while. Diving further into the details, some key figures from the Federal Reserve already stepped up to the plate with their insights, creating quite the prelude to Powell's speech. When it comes to interest rates, opinions within the Fed are not one-dimensional. We got two heavyweight opinions, each coming from distinct corners of the Federal Reserve System. Let's start with Boston Fed Bank President Susan Collins. Now, she's been under the spotlight lately and has a pretty measured take on things. Collins is of the view that we're in a sweet spot with the current interest rate levels. She believes there's no pressing need to push them up. However, and this is key, she's also not closing the door completely on potential adjustments. There's an underlying hint that if economic conditions demand, they might consider tightening policies. On the flip side, we have Philadelphia Fed Bank President Patrick Harker. Harker's views are quite definitive. He's advocating for keeping interest rates stable, specifically in the range of 5.25% to 5.5%. And if you're wondering whether he foresees any rate cuts on the horizon this year, the answer is a firm no. These contrasting opinions from within the Fed add layers of complexity to the overall narrative, making the upcoming symposium all the more intriguing. And trust me, as these perspectives converge and clash, the ramifications for the market could be vast and varied. So, with a backdrop of all these opinions and anticipations, you might be wondering, how is gold actually performing in real time? Let's paint a picture. Imagine the gold market as this vast ocean, and right now, the waters are calm, but there's this palpable tension in the air like a storm is brewing on the horizon. Gold prices in particular have been dancing around a specific figure, holding steady just above the $1,910 mark. The reason for this cautious stability? Everyone is collectively holding their breath for Powell's commentary at the Jackson Hole Symposium. But here's where the plot thickens. While gold seems to be in this holding pattern, the US dollar is flexing its muscles. The strength we're seeing in the dollar is nudging us towards thinking that Powell might lean more on the hawkish side of the spectrum. In fact, the US dollar index, DXY, has been on a bit of a winning streak lately. It's rocketed to an impressive 11-week high, touching the vicinity of 104.26. This isn't just a random surge, though. A significant chunk of this strength stems from the U.S. economy showing its resilience. While our economy stands tall, some of the other big players from the G7 group seem to be treading water. The stark contrast is painting a fascinating global economic picture, is partly why the dollar is shining so brightly right now. And speaking of the U.S. economy, some recent stats are quite interesting. The U.S. Department of Labor reported that new jobless claims for a particular week were at 230K, which is actually better than what most anticipated and even better than the previous week's 240K. This, combined with fears of a Chinese economic slowdown, has made the dollar soar. But gold? Its gains are kept in check as the U.S. Treasury yields are bouncing back, with the 10-year U.S. bond yield rallying to a strong 4.26%. Before we venture any further, you need to be in the loop on the nuanced market signals we've been receiving. The gold market, as you know, doesn't just sway to macroeconomic beats. It also grooves to the intricate rhythm of other indicators. Let's talk about the US dollar index, DXY, for a moment. Picture it as a barometer gauging the health and vigor of our economy against a medley of others. Recent figures have been quite revealing. The index surged to a commendable 104.26, marking a fresh 11-week pinnacle. Why, you ask? Well, part of the tailwind came from a heartening report on the job front. The U.S. Department of Labor recently released some figures which were cause for a mini celebration. The number of folks applying for jobless benefits for the first time, it landed at 230K. Now, while this might sound like just another statistic, when you realize this was lower than what was anticipated and is a positive drop from the previous 240K, it paints a hopeful picture. But wait, there's another twist to our story. U.S. Treasury yields have also been making headlines. Specifically, the 10-year U.S. bond yield, which recently underwent a recovery to circle around 4.26%. Such moves often act as chains on gold's potential surge. So while the broader picture might be colored by anticipation around the Jackson Hole Symposium and Powell's impending speech, these microeconomic narratives are weaving intricate patterns in the fabric of the gold market. And these are details any keen observer just can't afford to miss. Now, if you've been following the economic symphony, there's always a plethora of data points that come into play, acting like different instruments adding depth to the melody. The recent data tunes have been quite varied, producing a mix of harmonies and occasional discords. First, let's look at the S&P Global's rendition. They unveiled the U.S. preliminary PMI for August, and it's revealing a slightly melancholic tune. There are hints suggesting that the robustness of the U.S. economy might be facing a few challenges. We're looking at the double whammy of rising interest rates coupled with the less than stellar demand outlook. What does this mean? It suggests that firms are facing tighter constraints. They're having to operate with reduced capacities, partly due to inflation, pushing costs upward. The crescendo doesn't stop there. The U.S. Census Bureau stepped in with its own notes, highlighting that non-defense capital goods orders in July saw a modest uptick by 0.1%. On the surface, that seems all right, especially as it was within investor expectations. However, when you compare it with June's 0.4% contraction, it plays a subdued note of caution. And now, the financial orchestra is tuning their instruments to the upcoming release on 5-year consumer inflation expectations. Everyone's waiting to see if he'll add a harmonious or discordant note to the ongoing composition. Shifting gears a bit, let's talk about the technical choreography happening in the gold arena. If the gold market was a dance stage, we'd see the precious metal taking cautious steps, especially around the $1,910 mark, just ahead of the Jackson Hole performance. But it's not all slow waltzing. There's a bit of tango too. Gold has been showing its mettle, trying to push past the formidable 20-day exponential moving average EMA barrier set around $1,915, and there's a victory leap as well. It soared past the 200-day EMA, which is a bullish sign. For those who love to read the dance cues, the Relative Strength Index, RSI, is hinting at a changing mood. The bearish undertones, which have been dominant, seem to be fading into the background, suggesting a more optimistic dance ahead. So there you have it, my friend. Wild times in the gold and economic world. Keep an eye out for Powell's words. They might just shake things up a bit more. Stay tuned and let's chat again soon.